Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the gold market. So currently, we're in a bit difficult situation with the gold market because currently it's a lot of questions concerning the weekly bread and butter buy around major conference support, and actually, as we have suggested, this should be some upward action, but as you understand, the Jerome Powell speech have brought a lot of adjustment to overall picture, and which we somehow should resolve. So speaking on the daily chart, theoretically, the bread and butter trade is not cancelled yet. It's just because mostly everything will depend on this confluence area and these lows. Trend remains bullish and market starts flirting with the May City predictor. So very similar picture to your currency. If, for example, we will get today some kind of the wash and rinse right there with accompanied with a bullish grabber, theoretically, we could consider maybe some upward action in the way for some double bottom pattern and lower time frame that still could lead market to the 19 even completion of the bread and butter target. But no doubts that will be possible only on the background of some fundamental data. For example, if we will get weak non-farm payrolls release. For instance, if we will get not the 200,000 as widely expected right now, but maybe 100,000 even lower. So only this some strong drop in some fundamental data could put gold back on its own and make possible the upward action. If we will get strong payrolls, probably we should forget about weekly bread and butter buy and should focus on the major monthly scenario, which is bearish. So we consider this bread and butter only as a chance to get short position with the monthly scenario. That suggests a bit deeper retracement that could provide better entry point with a possible downward continuation in the way of some big ABCD pattern, at least to the 1750 area. But based on the fundamental background, we are not exclude that actually the big pattern that we have right now in the monthly chart, it might be the starting point for the stronger drop back to the lows, or maybe even to the 16 even area at least. So that's what we have currently on the table. That's why first we have to resolve the riddle with the probable bread and butter, what to expect. On the 4 time frame chart, take a look. With this drop, as I said, it might be some kind of the double bottom, and theoretically there are chances exist that you could trying to take the long position, but will be more like some gambling rather than some logical decision. The only attractive with this trade is that you could place relatively tight stop. So we need to place stop just slightly below the confluence, right there and below the previous lows. Then be watching for payrolls release and what will happen. And this is some kind of the culmination point, because it will provide you the best risk-reward rate, but low chance on success, just because you can see this collapse that has happened. It's more probable of the downward continuation currently. But still, this opportunity exists. So if you're ready to take this risk, you could make this kind of the shooting from the hip trade, but it's will be more emotional. But who knows? If you use just minor trading volume, you theoretically could consider this as well. It mostly depends on mentality of the person who will be trade. On the hourly chart, currently I do not see a lot of different setups for trading. Maybe with the pullback that's actually very similar to your currency setup. Here is great thrust down. If we'll get some minor pullback, you could consider it like the intraday bread and butter sell or some other intraday patterns. Use it for possibly taking the short position if you consider better than expected non-farm payrolls release and you're watching for a possible downward continuation. That's just might become the opportunity for taking the short position and you could possess yourself with the possible downside breakout. That's actually all that we have currently on the gold market. Theoretically, if you take position right there, it's relatively safe because you will be able to move stops to the break-even once the downward action starts here, and just watching what will happen with the with the Brent bottom on the weekly chart. If market will just take it out of these lows, keep going lower, that's great. You will have the great position around 1825. If not, market starts returning that back up, pearls will be bad, and you could see some fast acceleration. Well, that's okay. You just out on the break-even, and we return back to the idea of the possible double bottom or something of that sort. So that's what we have currently on the gold. Mostly this is some waiting time here and see what will happen, because major clarity will come only when we will get information about these lows. Downside breakout means downside continuation. While market stands above it, keeps chance on a deeper retracement. But unfortunately, currently gold is too dependent on the external factors, and which we actually can't predict. It's out of our control, and we're also highly dependent on them. So technical picture looks like we just have discussed, but pearls probably will be the major driver until the end of this week.